Today's top news summary as of November 12, 2025. World. In the global arena, several pieces of news stand out. In the UK, the labour market is showing signs of weakening. The unemployment rate rose to 5% in the 3 months to September, its highest level in over 4 years. This is interpreted as a warning sign ahead of the UK government's upcoming budget and suggests the economy may be under more strain than previously thought. In addition, investor sentiment is shifting. Major tech companies' huge spending on artificial intelligence, AI, is creating anxiety among bond and credit market participants, pointing to broader concerns about valuations and risk in the tech sector. These developments underscore how labor markets, fiscal policy, and technology investments are increasingly interlinked globally. A weak jobs market can limit consumer demand and growth, which in turn impacts corporate earnings and investor appetite.
Economy. Focusing on the economic front, the UK picture is prominent. As noted, unemployment rose to 5% and wage growth has slowed. Annual regular pay growth fell to about 4.6%. The decrease in employment and wage momentum strengthens expectations that the Bank of England may cut interest rates in December in order to stimulate growth. Elsewhere, companies in the UK are already anticipating relatively modest pay rises, up to 3%, in the coming year, and some employers expect that AI will reduce staffing requirements in certain roles. This introduces a dual challenge: soft labor demand on one side, and potential structural change from technology on the other. Globally, reports highlight that while the economy remains somewhat resilient, uncertainty is pervasive. Inflation, digital transformation, geopolitics, and private credit risks all form part of the backdrop.
Finance. On the finance side, 3 major threads stand out. Markets and rates. The weaker UK labour data has increased market bets on a December rate cut by the Bank of England. As a result, UK government bond yields dropped and the pound weakened. Tech investment and bond markets. Investors are voicing concern about heavy tech investment, especially in AI infrastructure and data centers, and its spillover into corporate debt markets. This tech spending risk is being priced into certain bond issues. Corporate moves. For example, Japan's SoftBank Group sold a US $5.8 billion stake in NVIDIA Corporation as part of its AI investment strategy. The move triggered market reaction in tech shares globally. These signals underscore a broader shift. Monetary policy expectations, tech-driven capital expenditure, and risk pricing in debt markets are all interacting in ways that could influence the next few quarters significantly.
Technology. In the tech space, the focus remains firmly on artificial intelligence, AI, and how it is reshaping business investment, workforce planning, and valuations. The fact that a major investor like SoftBank is divesting in one AI-related play, NVIDIA, while redirecting funds into other AI bets signals 2 things. 1, that valuations may be stretched, and 2, the race for next-gen AI platforms is escalating. Additionally, surveys of UK firms show that while wage growth is modest, many employers expect AI tools to reduce staffing in certain roles within 12 months. This opens questions about the pace of automation, the reskilling required for workers, and how markets value tech companies when job displacement becomes a visible risk. Finally, debt markets are flagging concerns. Companies heavily investing in AI infrastructure may face refinancing risk, meaning that technology itself is influencing traditional financial risk channels.
Why it matters. Key takeaways. A weakening labor market, as in the UK, tends to reduce consumption, slow growth, and push central banks to ease policy. Heavy tech and AI investment can be a double-edged sword, high potential for growth, but also elevated risk in valuations and corporate debt. Financial markets are now pricing in these cross-currents. Labor, fiscal policy, technology, and credit risk are increasingly interconnected. For Asia, including Korea, the global shifts matter. Export demand, technology supply chains, and global investment capital flows will all be influenced by how these dynamics play out in the US and Europe. For individuals and companies, staying aware of how automation, AI, and labor market trends are shifting helps with strategic planning, skills, investment, budgeting.